Good afternoon and welcome to everybody. My name is Michael Turner. I'm Head of Corporate Cash Management at Deutsche Bank in London. I'll be your facilitator for this stage session entitled The Journey to Automation Today and Tomorrow. It's in association with Deutsche Bank. That's enough of the adverts. A particular welcome and thank you to our participants. Anita Polzhofer, Head of Treasury at Arup. How did I do, Anita? Marion Laboure, macro strategist at Deutsche Bank Research, and John Meehan, who is head of Treasury at Froneri. Before we start, a bit of housekeeping in line with ACT rules. I was going to make a joke there about a fire alarm, but I got dissuaded from making that joke. There is a toolbar at the bottom of your screen, so please feel free to submit any questions in the Q&A box. We will certainly try answering these as we go along. I can't promise, we've got 45 minutes, 3 people to speak, so we will do our best. If you don't get your question answered, please feel free to approach me at the Deutsche Bank stand and I'll get an answer for you, whether it's from John, Anita or Marion. This session is being recorded, I warn you. Will be available for replay on this event platform shortly after the session finishes. Please also feel free to get engaged with the ACT on social media. You can join the ACT's active LinkedIn groups, follow on Twitter at ACT Update, and tweet, which at hashtag ACTAAC20. I think I got that right, sorry. Me and Twitter don't really get on. So that is the housekeeping out of the way. To kick off today, I'm absolutely delighted that Marion will give us a presentation on the future of payments and digital currencies. We will then follow this with a discussion with Anita and John about what they're seeing today in their respective businesses and their approach to treasury automation, digitalisation, and their future journey. So without further ado, I'm pleased to introduce Marion Laboure. Marion is currently covering, and I'll try and get this right, Marion, payments, digital currencies and fintech at Deutsche Bank Thematic Research Team. She also lectures finance and economics at Harvard University. Prior to joining Harvard, she worked as an economist at the Luxembourg Central Bank, also at the European Commission, and was also a fellow researcher at the IMF. Marion has authored several books and has won prizes for her research. She holds a PhD and a master's degree in economics. Marion, would you like to take the stage and kick us off, please, with your presentation?
Yeah, thank you very much, Michael, and good afternoon, everyone. So today I'm going to talk about the future of payments. And I'm going to talk about the trends in payment that we are seeing. So if we move to the next slide, today we are going to start with cash. So perfect, thank you. Cash first, and then we'll move to the rise of e-commerce and digital cash, then, and finally to central bank digital currency, or sometimes, which is referred, digital cash. Great. Let's move to the next slide. So many people are wondering whether or not the COVID-19 will lead to the end of cash. And the short answer then is next, not at all. So cash in circulation, as you can see on this chart, has nearly doubled over the past 20 years, and it's mostly driven by the large banknotes in circulation. More recently, what we are seeing over the last 6 months is that the increase of banknotes in circulation in the Eurozone reached a new all-time high, and it exceeds the increase that we have seen during the 3 months following the collapse of Lehman Brothers in 2008. And this is due to the fact that people are withdrawing cash, as it seems as safe even to store value, especially during crises. So at Deutsche Bank, we have conducted a survey. So we have interviewed more than 3,600 people, and more than 60% think that cash will always be around. So we have to distinguish between cash as a store of value, what we have seen, which is unlikely to disappear anytime soon, and cash as a means of payment. And what we are seeing when we talk about cash as a means of payment, so the long-term trend, it's definitely cash has been losing ground as a payment method over the past years. And there is a clear shift towards digital cashless society. And a specific example is Sweden, where cash in circulation now represents only 1% of GDP. So if we move to the next slide here, you can see that these trends over the past 6 months has been accelerated by the COVID-19 crisis. So first, in January, the Chinese central bank and government decided to destroy banknotes that have been circulating in high-risk area for the COVID-19 virus. So they have basically highlighted the risk of infection from physical cash. Even if studies have shown that banknotes and credit cards, like any other surface, can carry a large number of microbes, but exactly the same than any other surfaces than a large number of people can touch. So we can see on the second chart that we have seen unprecedented public concern from cash and card transmitting the virus, and globally the number of internet searches of cash virus surged to unusual levels in April and May. And since the COVID-19, many retailers have stopped accepting cash and are heavily pushing towards contactless payment. And this is obviously explained by social distancing measures and the fact that people are avoiding contact. So there were many studies released. The most recent is probably the Mastercard study that has mentioned that 79% of people are now using contactless globally, and the majority of people expect to continue using contactless post the pandemic. And a specific example is Germany. Over the May-June, we had more than half of card payments that have been done contactless versus a third in December. So, as we have seen, this has led to unprecedented concern. And if we move to the next slide, you can see that central banks have responded to this public concern in 3 different ways. First group of central banks have actively communicated that risks were low. So this was the case of the Bank of England, the Bundesbank in Germany, Bank of Canada, South African Central Bank. And a second group of central banks have taken further precautionary measures. So this is the case in China, South Korea, Hungary, Kuwait, and in the US. In the US, the Fed has decided actually to quarantine banknotes coming from China earlier this year. And the third group of central banks have explicitly encouraged cashless payment, like the central banks in India, Indonesia, and Georgia. So over the medium to the long term, this concern over only cash has certainly added to the calls for central banks to develop digital cash, central bank digital currency. And in the US, you may have seen that the draft of the COVID-19 stimulus bill first included and then discarded the creation of digital dollar wallets. And you may have heard as well that earlier this year, the Swedish central banks and the Chinese central bank have also started piloting central bank digital currency. Okay, so now, next, let's see what happened in terms of rise of e-commerce and digital cash. So on slide 8, you can see here that there is a notable phenomenon from COVID-19, which is the accelerated digitization of commerce and the future growth in the merchant payments market. And one of the lessons of the crisis is that this is certainly the real birth date of the internet mass market consumers. So we had around 80% of small European businesses in retail that didn't have any online shopping capabilities before. And some didn't even have a basic informative website. So many shops, businesses were just out of business during the lockdowns. So according to our proprietary analysis, in Western Europe, consumers have spent on average around 15 to 20% online compared to the pre-coronavirus period. And the biggest rise, as you can see on the chart, it's in Anglo-Saxon countries. In the UK, we had a plus 50% in terms of e-commerce, and in the US, plus 30%. And looking forward, with this recent surge in new online shoppers and roughly half of them typically converted to repeat users, we expect a sustained improvement in online physical goods volume growth to plus 20% globally in 2021 and 2022, which is roughly 5 points higher than pre-COVID-19 forecast. So this was for e-commerce. Now let's see what happens in terms of cash to digital migration. So on the next slide, what you can see, it's basically we have a switch to cashless transaction. So despite cashless payment already growing 4 to 5 times faster than GDP in Europe before the crisis, 75 to 80% of purchases were still not digital, and cash was the default means of payment in several countries, including Germany, Austria, Italy, and Switzerland, amongst other countries. So we know that changing payment habits has historically been a very slow and complex process. And in this regard, the COVID-19 crisis has been a phenomenal accelerator, and we now probably stand 4-5 years ahead of what we expected before the COVID-19 crisis. Some outlets have also banned cash payment. Cash withdrawals at ATM have collapsed, while the massive rise of the ceiling for contactless payment went up in Europe to 50 euros in 17 countries. So this level suddenly reached in cashless usage may decrease somewhat over the coming month, but the current situation will probably mark a turning point and bring about what we can call a new normal in payment. So on slide 10, you can see that here we have a chart representing the demographics and the digital wallet adoption. And what I want to show you is basically the effect of the COVID-19 on payment systems in Asia could be felt sooner than in Europe and in the US, given the already high penetration rate on digital payment. So you can see on this chart that China, and it's true for most Southeast Asian countries, have a significantly larger young population that compared to the US and Europe. And young populations tend to be much more open to adopting new technologies. So people in China, India, and other Southeast Asian countries readily jump from a cash-based society into a digital payment society. And it's because digital payment services are vastly more convenient than the cash-only market, and this transition is much more natural. While in the US and in Europe, we have a long history of using credit card, which makes it much harder for consumers to shift to digital payment. So now let's move to what we call central bank digital currency, or in simple terms, what we can also call digital cash. So digital cash, it's not new, and the concept started with cryptocurrency, and cryptocurrency started 30 years ago when DigiCash, which was the first worldwide virtual currency, started. The most famous cryptocurrency is Bitcoin, that was wanted in 2008. But cryptocurrency have passed the tipping point needed to become fashionable in June 2019, when Facebook has announced its Libra cryptocurrency. And with nearly 2.5 billion users, which is basically roughly a third of the world population, Libra had definitely the potential to compete with traditional online payment platforms. So this announcement of Libra spooked the world's major central banks into swift actions. Most of central bank policymakers have reacted, including Jerome Powell, Christine Lagarde, and many others. But this concept, again, it's not new, and over the past 2 years, worldwide central banks and governments have multiplied and sped up their digital cash initiative. And in the survey that was released earlier this year in January by the Bank of International Settlement, we know that 80% of central banks are developing a central bank digital currency right now. And this work goes far beyond research, since we have 10% of central banks, mostly in emerging economies, which are already running pilot projects. And looking ahead, the Bank of International Settlement estimates that central banks representing about a fifth of the world's population are likely to issue a general purpose central bank digital currency in the next 3 years. And the main motivation to issue general purpose CBDC are numerous. Among advanced economies, the primary motivation is probably to improve payment security. And among emerging economies, generally, central banks have a wider array of motivation, but the main includes probably financial inclusion and sometimes also good to be a substitute of cash. So if we move to the next slide, you can see here that we have different design choices for different consumer needs. Consumers have 4 main desires and needs. First, consumers want digital currency to have cash-like functionality, so peer-to-peer, like cash. Second, needs that consumer wants, it's basically consumers will demand strong cybersecurity with resilient operations. And the third, consumers will use digital currency if it's simple and universally accessible. And the fourth one, it's if it allowed to make cross-border payment in a quick and efficient way. In terms of key design features of central bank money here, so you can see that CBDC could be interest-bearing. So it means that when the central bank have a negative interest rate or a very low interest rate, it could be possible for the CBDC to be remunerated at a negative interest rate. I mean, theoretically, it may be not the case, but in theory, it could be the case. And obviously, a CBDC should be 24/7 days a week available, and it could also leave a digital footprint, unlike cash. So if we move now to the next 2 real cases that we have close to us. Let's start with Sweden, which is closer, and Sweden started piloting projects earlier this year in January. The research on digital currency in Sweden started in 2017, and as you can see on this chart, cash in circulation has been declining since 2007 and now represents only 1% of GDP. That's very low. It's one of the lowest level in the world, as you can see on the right-hand chart. So it's more an exception, but basically the CBDC is also to complement the fact that cash has been declining in this country. If it works well, the government plans to implement the digital currency throughout the country in 2021. Next business case that we have, it's in China. The research on digital currency started much earlier. China started in 2014 on a project called DCEP, which means Digital Currency Electronic Payment. And the main purpose of the digital currency in China was twofold. First, to improve financial inclusion, which is another step in the development of China's digital economy. And the second one, to replace paper money. So what we know is we were expecting the China digital currency launch to be later this year. It happened much earlier in April. probably because the US-China trade war and Facebook announcement have also accelerated China's plan to launch the CBDC. So what happened in China? In April, China started testing the e-RMB for payment in several major cities, including Shenzhen, Suzhou, Chengdu, and the new area south of Beijing called Songdan. Sorry for the pronunciation. And the Chinese government expects to expand the pilot program at the venue for the 2022 Beijing Winter Olympics. In China, we have more than 600 million consumers who are using WeChat and Alipay on a daily basis. So digital RMB on people's smartphone will likely win rapid and widespread acceptance and adoption. China has also more than 1.4 billion inhabitants, so Chinese CBDC has probably the potential to advance digital currency into the mainstream. And from a regulatory perspective, the emergence of the e-RMB would mean that every financial transaction would be visible to and traceable by a government authority. Thank you, and I will hand it over to Michael now.
Marion, thank you. I personally found that fascinating insight into the future, with perhaps the future not being as far away as we all may think. Now that we've spoken about the future, though, I'd like to bring you back to today and to ask our corporate treasurers about their particular experiences in automating Treasury today whilst planning towards digitalising Treasury for the future. Anita, firstly, welcome. Please, could I ask you to begin by telling us a little bit about how the award-winning Arup Treasury have addressed automation in the past and what you're planning for the future?
Sure, thank you. Thanks for having me. So yes, my name is Anita Polzhofer. I'm the head of Treasury for Arup. Have been with the company now for the past 3.5 years. Arup is an engineering consultancy business. We've been around for 74 years now. We have about 16,000 staff. We operate in about 35 countries around the world, and project-wise, we probably would have operated in the majority, around 180 countries in the world. So we're quite wide and far. For Arup Treasury in itself, the journey began about 9 years ago. So a lot of it was done by my predecessor. Initially creating, about 9 years ago, no treasury function was really, centralized treasury function was in Arup. The first step was really visibility as a key initiative. Initially, the visibility was only about 5%. We have implemented since a global cash pool, which is a hybrid model between a physical pool and a notional pool. That has allowed us the visibility as well. We have already had the relationship with one main bank, which has helped us on that journey. Because of the global cash pool and because of having the access to one bank in this case, it has allowed us to go from about 5% visibility to a good 90-95% visibility on a real-time basis daily. On our cash balances. As the next step, from the moving on from the cash, for the next step would have been the FX. We have started then on rationalizing banks through adding some of the banks onto 360T as our trading portal. That was then included also with our money market funds, so we can access both of this through our 360T portal. And trade through this portal. As part of the next step was in the Tms implementation. We have a Tms system that allows us to link both of these systems, so the banking system, the banking portal, the 360T portal, and the TMS, all of it together. And it allows us also to record all of our transactions, including the relevant accounting entries that would then go into our EP system. So we have automated as much as possible between all the systems that we have. That includes intercompany netting. We have a system called co-process, which allows us to, especially given we have so many staff, which obviously creates intercompany working on different projects throughout the world. It allows us to automate as much as possible for all these monthly transactions that will go through, and they can be handled now within about 48 hours. That includes trading and settlement. One of the steps when I joined the company was to look at a host-to-host connection. So we have initially started with the host-to-host connection for our Treasury payments, which includes our netting payments, but also our FX. So we have automated with the host-to-host to our bank. We can just, by pressing a button, just release all our payments that we need to. And we don't have to have the manual paperwork anymore getting it to our shared services. We have a shared services who could process our payments, but obviously, given this is an automation journey, this was much more suitable for us. We are a fairly small team, so for us it was very much system heavy and people light. It was the same ethos for my predecessor, but also for myself. And overall, it has worked very well for us to have the full visibility, to have access to our cash, and to have automated as much as we can so far. As part of our next steps would be the implementation of a payment hub. So we're looking at trying to find more efficiencies as part of that. As mentioned, we have a shared services center. We have two actually, one here in the UK, one in Hong Kong. So we're trying to just automate more on that side, but also looking at a cash flow forecasting tool will be something hopefully not in the too distant future. So those are the two main future projects from our side.
Thank you, Anita. Pretty much every conference I've ever been to mentions cash flow. Seems to be the one area that everybody seems to struggle with. Thank you for that. John, welcome. You've worked for some long-established companies in the past, but now you're working with a relatively younger company, can we call it? What are the challenges that you're facing, and what are you having to address? You know, having a business which is only 4 years in its infancy as it is today. And I think you might be on mute. So we have a sound issue. We'll just see if we can get John reconnected, and if John could give me a thumbs up when he is. I think there's a technical issue there. Marion, may I come back to you? We've got a couple of questions. What does the experience of India and its UPI have on the implementation of widespread digital payments in the EU 27 and the UK?
Yeah, that's a very good question. I'm a big fan, to be honest, of what the Indian government managed to do. It has been severely criticized as well due to many weak things, but they basically managed to enroll 1.2 billion people, with 1 billion people per day actually with the Aadhaar system, and that's pretty impressive. And in terms of impact, it has definitely decreased financial exclusion and improved life of millions of people. So I think that's pretty nice. It's quite a good example of what a government can do with some private-public partnership. Definitely, yeah.
Okay. Thank you.
Can you hear me yet, Mike?
Yeah, we can. Thank you, John. Thank you, Marion, as well.
Great. Technology hopefully will only fail me once today. So my story is it's a little bit different at Froneri. As you said, 4 years ago, Froneri didn't even have a central treasury function. When R&R and Nestle combined forces to create Froneri. So before that, R&R had a turnover of around 1 billion in 6 countries. Now we've got a turnover of about 4 billion in 24 countries. So those of you who don't know Froneri, we're the world's second largest ice cream company. We sell products, Nestle products, Rowntrees, Mondelez, and we're also very big in private label. So if you go in any of the supermarkets in the UK, you're likely to pick up an ice cream product that's been made by Froneri. So when I joined Froneri 2.5 years ago, is the classic story. Everything was manual. FX was done over the phone with one bank, which I'm sure that bank was very happy about. Everything on spreadsheets, the lot. And our CFO actually joined around the same time as me, and really wanted to push automation, as much as possible. But with a team of 2, obviously, including myself, there's only so much you can do. Especially when we did 3 acquisitions across 12 months at one point as well. So we decided this was the year that we were really going to kick on that automation journey. And so we did an RFP on a treasury management system, and we're almost ready to implement that with Kyriba. And we did all the discovery work this year, the scoping, what we wanted to include. We worked a little bit with KPMG on that, who helped on the consulting side. And the obvious ones for me were on FX, being able to take that through end to end. We've got 360T in place. We've got more banks going now, but incredibly manual. MS will really help us on that front. Again, we've got a couple of 100 bank accounts across those countries, over 30 banks. So getting the cash visibility, we're planning to connect directly, get our own Swift BIC, pull all that data into the system. I think one area which I took a bit of convincing on by KPMG was on the cash flow forecasting. So personally, I'd never really seen it work very well in a TMS previously, but I think now, the SaaS-based platform, and fortunate for Froneri that the ERP is extended across most of the countries. I think we can really automate that process, bringing in the AP and the ER into the TMS, sending those journals for any FX interest, all of those things directly to the ERP. So we're planning to automate all of that. And now when I think about it, being able to update your cash flow forecast every single day compared to once a month, and a week later you're already don't know why you've got this variance. I think it's a complete no-brainer now. When we initially did it as well, the scope of the project was quite limited, really, to especially on the payments front. We were just going to link our pool banks, but it's been quite refreshing that when we've spoken to the business, we've realised there's appetite there for most of the countries to have a payment bank. So we're planning to connect a payment bank in each of those 24 countries, that we'll then hopefully be able to get the businesses to concentrate their flows on that payment bank, and then reduce the number of banks overall across the group as well. Hopefully get down from that over 30 number to somewhere more around the 20 mark. That's my goal. But we are in countries like Philippines, where suppliers make you open a bank account just to work with them. So yeah, our journey is not quite begun yet, but we're excited at what the next few months will bring. That's for sure.
Okay, thank you, John. Have either of you looked at, on behalf of structures, for example, which might help you rationalise and help some of the automation process, or not? Anita?
Not yet. I think, yeah, Anita.
Oh, no problem.
Go on, John.
No, so I was just going to say, I think we've got a lot of the low-hanging fruit still to capture, and so I think that, you know, those things will be something for Froneri to look at in the future for sure. But for now, you know, we've got the obvious things we need to get done.
Anita?
We have, and we have used it in some countries, but it's limited, and I'm finding more and more questions are being raised where a lot of clients aren't that keen on it. So even when we explain it, it seems to be more and more questions are coming up in general, just trying to understand what that model exactly means. So it's limited, very limited.
Yeah. I mean, clearly it only improves automation, or can improve automation, but you know, it's a complex background. Which areas have you both found most difficult to automate, and why in particular?
I would say from my perspective, there are some areas, so for example, between like on the forecasting from the ERP side, I find that it really depends on the ERP if you have the same ERP systems. So a lot of the times you find a lot of the bigger companies don't have the same ERP systems, and it may not be used in the same way. So I find utilizing what you have in the ERP with the forecasting quite difficult. But that's more due to legacy potentially, rather than the systems not being able to speak to each other. It's more trying to get the same one system, for example.
It's the problem for all large corporates, as far as I'm concerned. Anybody's growing by acquisition, you always have legacy systems. Who's going to make the big decision to go to one single platform? I know some clients have done that and to go globally and have got a single instance, but they're more the exception rather than the rule, I think. And you know, you could argue sometimes that applies to banks as well as to corporates. John, did you have a view on difficult to automate? You said FX you thought was a bit of a no-brainer in some ways, but
yeah, I mean, for me, that was, you know, that was just something really easy to do. You know, within a week you can be on 360T. Clearly, then you need to do the work with your banks to get the ISDAs in place. That was something that takes a bit longer because it takes the time. But once you get that, you know, in terms of executing trades, that's quite easy to do, and it's, you know, doesn't really cost much to actually put that in place. I think for us, the actual getting the RFP off the ground for the treasury management system was the difficult piece, because it is a huge piece of work. You know, we're very challenged at Froneri to ensure that we get the biggest bang for our buck, I guess is the phrase. So, you know, if we're doing something and spending money, then we have to see a return for it. So building that business case, you know, took some time. But I think by automating the cash flow forecasting process and getting the visibility of the cash, you know, we'll actually be able to reduce idle cash quite significantly. So we won't be leaving cash in certain countries for as long as we do now, and that'll allow us to either repay debt or, you know, initially I was forecasting some return on deposits, but I think 2020 is laid waste to that.
I think from what's your view on the achievability of real-time treasury? Because everybody's talking about real-time treasury and instant payments and fully automated. Maybe the banks need to be open all weekend. I'll probably get shot for this as well, by the way, when I eventually get back to the office. But provided you all with 7 days a week liquidity and investment solutions and pay down your debt at weekends. But what do we really think about the achievability of real-time treasury in the next 5 years or so? Marion, do you have a view on that as a research person? I think you're on mute. Sorry, Marion, we can't hear you.
Shall I jump in while Marion's trying to sort
Yeah,
the
do you mind,
technology
John?
out? I think
Return the favour from earlier. Thank you.
yeah, exactly. So with on our side, we've looked at sort of receivables financing right across the group, and one of our banks there talked about getting an API actually set up for us, because whenever we've had these facilities in place in different countries, the heads of finance have always complained to me that it's an absolute nightmare. Actually, getting the data and doing the reconciliation process. So they've talked about setting an API just for us, and I think we did effectively be a guinea pig there. So it feels like the banks aren't quite ready yet for it to be rolled out everywhere, but they'll initially be doing it on a case by case basis. And then hopefully in a few years it'll be something that we'll all be able to tap into.
I suppose my view is always that not being defensive of the banks, but we all need to be lined up, don't we? All your vendors, shall we say? So the EIP providers, the TMS providers, everybody needs to be aligned to provide that real-time data. I think that's what I was trying to get at earlier. I'm just conscious of time. I'm just trying to pick off a couple of questions. There's one addressed to me, which if somebody could address that, we'll talk about that offline. Do we believe that COVID-19 will accelerate this trend towards the shared service centres, POBO and COBO? If we see a rise in trade barriers, will this discourage take-up? Good question. Anita, John, a view? I think Brexit might cause us a problem as well, by the way. We're not allowed to mention the B word, are we? But I think combination of Brexit and COVID, I think we take some steps forward. I mean, European regulation, definitely POBO, COBO, more on the POBO side than the COBO side, definitely good take up in Europe. People doing it in the regulated markets in Asia Pacific, so Japan, Singapore, Hong Kong, Australia. A bit more of a trial if you go to somewhere like Malaysia, where I think we've got a central bank sign off to do some POBO, but then the sign off came with you can only do it in US dollar, but not in Malaysian ringgit. So there are limitations in those markets. I think generally from an automation point of view, I think from my point of view, technology has changed the whole face of cash management since the time I've been in it, and on a weekly and daily basis, everything's changing. Lots of great ideas there. However, some of them mean that there is dislocation between the systems, and I think we need to get that systems much more coordinated and coherent. And this is obviously where the fintechs, I believe, have hastened the change, the speed of change. Any last comments? We've only got a couple of minutes to go. Plenty of questions come through, I'm afraid, which we won't be able to answer. Any final comments, Marion, Anita, or John? Yes, please, Marion.
Yeah, sure. I'm happy to follow up, as I can see a few questions that I will try to quickly address, and I'm more than happy to follow up after this. Regarding the three main benefits that we can have with a CBDC, I would mention first that that's willingness of people to have a digital currency. We have surveyed people at Deutsche Bank, and we found that 70% of people prefer digital rather than physical payment. It also addressed the decline of cash that we are seeing, and if people are not paying via cash, they are paying via cards. So it means basically MasterCard, Visa, and probably Amex. So being like more independent for the Eurozone. Probably as well in terms of monetary policy, it makes monetary policy much more efficient, since you can directly.
Marion, I'm going to have to jump in. I'm really sorry, Marion. I'm going to have to jump in because I'm being told we need to wrap up. So my apologies, but thank you to you Anita and John. Also my bank sponsor, Deutsche. Everybody for joining. You can watch this all again on demand. If you really want to sit through me again, I'm sure. Conference sessions will be made available for replay on the event platform soon after this finishes, and for 30 days after the event. Please do come to us with your questions. Please pay a visit to the exhibition hall where you can find more information, and you can continue the discussion and chat directly with fellow attendees within the networking lounge. Finally, please complete the session survey located next to the Q&A box. Thank you very much. There's some more stream sessions, live sessions later today, so please continue to stay with the ACT. Many thanks, everybody. Thanks for joining.